a lot of people used to say this, that if you want to make money, you have to be a businessman.
Yeah.
Right?
Yeah.
It's fundamentally incorrect today. Right?
Why is
Today,
that?
there are enough and more white collar jobs in India which are incredibly high paying. Right? And if you want an example of this, right, you can go to actually any of, fancy buildings where you live, right? And actually go in and check with, the people who are living there, what do their fathers do, right? And you will find at least 30-40% of the people who do corporate jobs.
Yeah.
Right? And despite the real estate costs, etc., which are there in one of the most expensive places in the world, right? The reality is because, salaries have reached that level in India today.
Welcome, Mikhil, to So What's Next today.
Thank you so much for having.
From your long resume, which is CEO at Apollo Finvest, co-founder at PharmEasy, product head at Coupon Dunia, and the director at Hotstar, I want to focus firstly on identifying problems, which means that a lot of people today want to build companies and create wealth for themselves, but they are not able to identify the problems that they want to solve. While you, in your span of 10 years, you did it very well. So tell me that how did you identify problems? Like, is there a process that you were following, or is it just like on intuition?
Across what you've told me is the fact that you want to start your own company, right? So if you want to start your own company, I think the most the starting point should be that, you should start working in early stage companies. Because you need net practice, right? Essentially, working in an early stage company, understanding the nuts and bolts of it before you go and jump in and do it on your own, right? So I always say, like, going and working in an early stage company is like a low blast radius, essentially. Like, you're basically try to run a startup but with adult supervision inside it, right? That's what I had, right? When I went to Coupon Dunia, as an example, even I had the same ambitions. I wanted to start my own company at some point in time, and I identified a company like this. I identified the founder over there who had a good, I would say, cultural wavelength with. And when I went there, I was very fortunate. He trusted me to do a lot of things inside the company, run a good part about the company, literally the tech, product design, functions, etc. He trusted me completely to do whatever I wanted with it to deliver results, as an example. And I was confident doing that because I knew in the end of the day, anything I would do wrong, he was there for adult supervision. I learned a lot. And obviously, that was like my foundational, I would say, cornerstone and pillars, as an example, by which I went on to go ahead and, start a bunch of these other companies in the rest of my career.
But then, so firstly, I know how you founded Coupon Dunia. I think it was like you were ordering food, you just saw a coupon of it, and then you were like, what is this company? And let me I think you just applied for it, right? So you either founded companies that were solving a problem, or you've joined companies that were solving a problem, right? So that is what I'm asking you, that, I mean, why did you think like back then that was like a big enough problem?
I think very honestly at that point in time, right, there were, just three factors which, led to me joining, Coupon Dunia, right? And I was very young, right? This is like almost 12, 13 years ago. So, back then probably I was like 22 or something like that. So I think realistically when I was thinking about it, the number one factor obviously was the fact that I was familiar with the product. I was using it, consistently at least once a month. Whenever I used to order Domino's pizza, searching for coupons, and, they used to be the number one website there. I think that was point number one. Point number two, I definitely wanted to, even before I joined Coupon Dunia, by the way, I had a own startup. I had my first startup, it was called Me Bonds. It was spectacularly, a huge failure, essentially, right? So, but the good thing out of doing that was I knew that this is what I want to do, right? I clearly didn't know how to do it, but I knew that is a space which I really wanted to get into. So I wanted to essentially go to an early stage startup and learn how this is done by somebody who's, clearly senior than me and more experienced at this. And the most important thing I think was that I was very lucky that I ended up going to a startup where, I had a really good connect with the founder, who basically, very honestly, the reason why he hired me, and I remember my interview process also, right? Like the reason why he hired me is he understood my story about, how I went about and built my first startup. And, he basically told me this, that you definitely don't know how to run a startup, but you definitely know what not to do. Right. So I'm going to hire you just because, of the failures you've had. Every time I do something wrong or silly, you're going to be pointing me out saying, just don't do that, because I've done it and it's failed. So he literally hired me because I knew what not to do. Right. So because, I had that really good cultural connection with him. These three factors played in quite a lot for me to be able to go in and join him and, really thrive in that environment, right? Um, that was like, the reasons basically for going in, and joining Coupon Dunia.
Okay. Like, so how did from Coupon Dunia, which got acquired, what was the story of like co-founding PharmEasy?
Actually, funnily enough, one of my roommates from CMU was planning, and he was already in India, right? And he was actually running a pharma distribution company. And since I was in Coupon, then every time we used to catch up, every time I used to be, after him, saying that you've obviously, worked very hard to build up the supply chain and you have economies of scale. Why don't you take some of the margin that you're having, in the B2B side of things, expose it to your customers, right, which are retail customers, and give them medicines at some kind of discount. And his answer always used to be that, we don't have the bandwidth for that, right? Our hands are full on the B2B side of things. Maybe some other time, right? And then finally, obviously, when this transaction happened, it was funny. We caught up at my another CMU friend's wedding in Pune, and over one crazy night, it was a cocktail party. Basically, he turned the tables on me, and he basically said that, you've been after me and annoying me, to do this, right? Now you have no excuse not to do it yourself. So why don't we collaborate together, and why don't you start basically something like this, which is on the B2B side, B2C side of things, right? And that's how it kind of started, right? Literally, we came back, and I think within 48 hours we had an app out, which was a very, very ugly app, if I had to say so myself. It literally
That
had
was the
2
first
pages.
prototype, right?
Exactly, it was the first prototype. We literally non-stop worked at it for like 48 hours overnight, literally in the living room of my house. And a lot of people who worked on it also. So I was employee number 4 at Coupon Dunia. Employee number 5, 6, 7, and 8, worked on the prototype for us at PharmEasy, right? And they were actually one of the first people who joined us as well. Again, that's the power of basically networking and chemistry.
I think. Yeah, that's
Right.
a crazy story.
Yeah.
So I wanted to ask you that in the first year of PharmEasy, like you said that these like your friend, your co-founder, he was kind of taking money from profit margins from the B2B segment and putting it in the B2C segment to kind of scale it up, right? So, and you all also raised money in spite of that, right? So like this is a very common question, but it's like still in a very gray area where when you all go to the investor meeting as 23-year-olds, what is the thing that these guys are looking for in you as a company, which is like I think pre-seed or pre-revenue, and what are you doing in that room or in that meeting to kind of convince them to invest in you?
So I think one thing to clarify is that no, they were not taking any money from the B2B business and putting it over here. I think they just had a lot of scale by which we were able to leverage that scale and get the medicines at a cheaper price, right? So that's the first thing. I think secondly, very honestly, for very early stage companies, right, what investors are primarily looking for, right, like fundamentally is number one, the quality of the team, right, like the pedigree of the founders largely, right? I think that's their bet, because usually early stage companies, it's very, very unlikely that they come to you with idea X, and probably by the end of the first or second year the idea is exactly same as idea X.
Yeah.
Right, there's a lot of pivots which you have to make. So from a VC mindset, right, I think the only thing that they are really focusing quite a lot on is they are betting very heavily on the founding team, because they are married to that in a way, but they're not married to the idea. The idea might change. The thing that they kind of focus quite a lot on is in the team, and secondly, largely, what broad area are you trying to solve for, right? And is this problem going to be something which is big enough, right? These are the two big things that they think of, because from a VC mindset perspective, they have to go after largish ideas, because obviously they all want significant exits, right? So it only makes sense for them to bet, especially when it's high risk, if the outcomes can be large enough, right? So these are the two big things that they kind of focus quite a lot on.
But when a company is pivoting, okay, now it can pivot to anything. It's not guaranteed. So when a VC, let's say I'm investing in your company that you founded maybe tomorrow, and you might pivot 1 year later. It can be into anything. So I don't know the broader area of the industry that I'm investing or when you guys pivot in, I might be investing in, right? So then what's the gameplay over there? Like,
I think, see, honestly, great investors know at such early stages, they should and they do trust the founders, because see, what most people don't understand are the economics of a VC funded company, right? I think it's not, very honestly, the way VC works, right, is that they are not stupid to fund so many companies, right? I think all
Yeah.
of us, I think,
yeah, can you explain the like model? Like, why do they invest in so many companies?
yeah. So I think this is the biggest misunderstanding in the, I would say, pretty much entire world right now.
World, yeah.
But I think the way it works, right, in very simple words, is that they invest in countless very, very promising teams. Okay. And the way they invest is that, if there is an exit, right, they are a last in, first out model. What this means is whoever's money comes in last usually has the most amount of leverage to be able to take out their money first in the case of an exit, right? So what this basically means in very simple words, right, is the larger the fund, the larger the leverage they have, the larger, their share of the exit whenever it does happen, right? Now, when they invest in promising teams, the reason why they invest in promising teams is they know this, right? In most case scenarios, whenever there is an exit, they will make the money first. Last, the people who will make the money will be the founders, right? So to answer one of the questions which you had earlier, right, is that what happens in the case of a pivot, right? The investors are very happy to trust the founders because they know it that founders are very, very heavily incentivized to go after large exits, right? Because if there is no large exit,
The founders get paid nothing.
the founders get paid nothing. The investor may make something,
Yeah.
right? So this entire model of VC, by the way, is extremely biased towards investors.
Yeah.
Right. It's almost like going into, a lot of people think it's like gambling.
Yeah.
But what people don't understand is VCs are the house. They always win.
Yeah, they always make some amount of money, if
Exactly, right? They always win as an entity, right? Obviously, there may
Right.
be certain VCs who are terrible at this and they'll have very poor returns because they make all bad bets. But in the grand scheme of things, right? Like, obviously, VCs as an entity always make money because that's the way the terms and conditions are, right? The terms and conditions
Right.
are very simple. If I put a check inside you, if there is ever a check which comes back, which is you exit the company or the company, gets some kind of exit, I make the money first in multiples of this much, in this much amount of IRR. Once I meet my return expectation, if there is any balance, then you get it, right? So that is how the laws of, I would say, power work inside a VC industry.
But like there are so many companies that raise at that much amount right now. I won't name the companies, but I'm sure you know what I'm talking about. And these guys are not able to promise, like, deliver on that, and they're promising like huge returns, and they're not even profitable yet. So, like, why are the VCs betting on those companies then?
Like I said, right, they're very smart. They have the math weighed again, for them, right?
Yeah.
It's like, see, the later the stage investment that you make, the more protected you are. So what happens inside a company, right, is that when you put in X amount of money inside a company, there is a timeline by which the opposite person has to give you a return. And if the return doesn't happen, there are various options that they have, including forcing the company to sell itself, forcing liquidation. There are many, many clauses, terms and conditions, right? It's not, it's
Why isn't this talked about enough?
because it's not sexy, right? Like, in the end of the
Yeah,
day, right?
yeah,
Like, it's
that's-
not, no founder's going to come out and be like, hey, I raised, this much amount of money, but it's not cool because I'm, I need to pay this back.
Yeah.
Everybody, that's what I'm saying, right? People are basically, hyping up the wrong stuff. I'll give you an example. There is a reason why Sachin Balsal, I would say, who's one of the most successful entrepreneurs of the country, in his new company Navi has diluted, I think less than 1%, right? Why is he doing that? If this model is so sexy, right, like raising VC money and
Building valuations.
exactly, why is he not diluting? He's not diluting because he knows this is how it works, right? When you take some money from somebody, you have to return their money and then you make money. Now he's realized, right, in his second inning, he needs nobody. He has enough money. He's funding himself. All profits are his.
He has
All
leverage.
valuation is his. He has leverage. Now, basically, from his perspective, right, in short, what I always tell people is, don't raise money unless you absolutely need it, right? There are various different ways in which you can run a company. As an example, I myself, right, like at Apollo as an example, right, it's a listed company, but in the last 5 years, I think we've done 0.8% dilution, right? Like, there is a very conscious reason why we have not even diluted more than 1% in the last 5 years
Right.
of running this company.
Right.
Because we are very, very clear that this is not something which I want to lose control over. I value equity over everything. No founder who values equity or who understands the economics of a VC fund, right?
Or ownership that way.
Yeah, constantly does not keep diluting, right? Because what ends up happening is, in very simple words, every time you raise expectations, right? That's a simple mantra, right? If you're raising at 50 million, you're raising at 100 million, you're raising at $1 billion, you are just tying yourself in to give an exit at a multiple of that number. And if you're not able to do so, it's very likely you go home with zero. Right. So that's the biggest issue. And I feel like, to me as a founder, at least, the only math I'm interested in is ownership, and what's the probability of me and the people inside the company who are building the company and my existing shareholders, what are the chances I'm going to make money for all of them, right?
Yeah.
Like, that's what matters.
That's true. Like that's a very good insight that you gave. Firstly, I also spoke to you about one more point, and you've mentioned that point 3 times now. It's that building a company is crucially fundamental to building a good company, right? Building a team. So, can you tell me that what I asked you earlier about building a career for young people is that a lot of people, apart from the tech world, are not able to find jobs in early stage startups, right? Because there are not a lot of open positions for them, and startups feel like they do not need them. And I speak for myself as well. How is it that you can solve, like, I mean, any person, young person can solve that problem for themselves? How should they go about it?
I think, very honestly, I just don't think that's true, right? Like, I think every company, right, like, has, like I was saying earlier, in our conversation, every company has, two sets of people, right? One are builders and one are sellers, right? Like, I think you just have to identify where you are. And, the beauty with young people is they are so malleable, right? You may feel you're very good at finance, you're very good at business, you're very good at economics, you don't know tech, and learning anything in today's day and age is probably a 6 months task, right? People could literally go on,
I think less.
like, I mean, you could literally go on YouTube in 6 months time. If you work hard enough, you could become like a masterful coder in Python, right? So I don't think anything is impossible, but of course you may have your areas of interest. But as long as your areas of interest largely are overlapping under either you're building something or you're selling something, right? You can fit into any company. I think the way to approach this entire segment, right, is, number one, the goal should be, you have to be very you have to make conscious career choices, right? Most people, I think, make a dig a hole for themselves by unfortunately, most young people, at least I've observed, they have two big issues, in my opinion, right? I think number one big issue is that they want everything yesterday, right? Because of social media, I think everybody sees everybody happy, everybody sees everybody on vacations and wearing fancy stuff. So everybody wants everything, right? When what they don't understand is everybody has little of everything, right? Like, so because of social media, you tend to feel like everybody has everything because everybody's just posting happy stuff, right? But I think what people should be in is, number one, be in a race with yourself, right? If you're better today than you were yesterday, you're winning, right? So that's point number one. And I think point number two is, most people basically, unfortunately, choose a job which pays the highest, right? And I think that's very short-sighted, because what people don't understand sometimes is, you may join a startup, and the compensation may be X, right? And maybe there's another opportunity where the compensation is 2X today.
No, yeah, like, let's be honest, like a startup and an MNC, obviously the pay structure will vary, and people will always choose the latter. Like that's what I went for. to be
Exactly, right?
honest.
So I think what happens there, right, is a lot of short-sighted thinking, because I personally, the way I try to think for myself also, right, is I always try to, think of every decision as, if I make this decision, right, where will I be 10 years from today? Like, what's the path over here 10 years from today, right? And I always ask myself, 10 years from today, like, if I'm 35 today, what would 45-year-old Mikhil want me to do here, right? And I think that brings a lot of
Clarity.
clarity in my thinking in
Yeah.
terms of what's the right decision, right? Because a lot of us, we are incentivized very heavily to do things which are uh, instant gratification, right? Because we
True.
are all living in an age of instant
Yeah,
gratification, right? Like,
exactly.
you order stuff Amazon, it comes within the same day, next day. You order stuff on Swiggy, it comes in half an hour. Everybody is just, if I don't get happiness right now in the next 1 hour, it's not worth it.
It's dopamine basically. Everyone's
Exactly,
looking for
right? We're all slaves of dopamine,
Yeah.
right? So I think that's something which you have to consciously fight against. And the way to do this, right, is number one is, take a deep breath, understand, okay, what is it that I'm really interested in? What are sectors I'm really interested in? And you have to firstly take a conscious choice, right? Do you want to be in the startup ecosystem, right? Because, by the way, this is not the only thing to do in life, right? A lot of people, maybe they have different interests, right? In that case, you can go ahead and, work in any company you want to, and, you may have your personal interest, and you free feel to follow that, right? But in case people want to start their own company, want to be in the startup ecosystem, want to be in this, kind of zone, I think the way to do that is, number one, identify a space, an industry. Inside that, list a set of companies which seem interesting to you by the things that they're doing. Within that list of companies, right, rank them by order of the founding team over there. Who seems the set of people who, if you interact with and work with, every day next to them, you learn the most, right? To me, when you're young, right, this is the most important thing. Your manager is critically important along with the founder, because, a startup is nothing but a reflection of the founder, by the way.
Yeah.
Right.
Yeah.
It's, MNCs things are a little bit diluted, because, it's I would say very, very sanitized.
Yeah, it's very like polished in a way, but it's not actually that's not the actual reality.
Yeah, I mean, those companies, right, they're very well structured, and they follow a lot of, I would say, set practices which are set in by HR, right? So they are run in a particular way, which is very, maybe sometimes common across a few companies, but in startups, it's a little bit more intense, because the teams are smaller and you have higher exposure uh, to what the founder wants to do, and their mentality is the DNA of the company, right? So it's critical for you to judge two things: who is going to be your team members along with your manager, and second most important thing is who's going to be the founder, because you're going to probably brush shoulders with them constantly, right? So I was saying, basically, there are three things which are fundamentally important for you to, check before you join a startup, right? I think one is, obviously, the company should be in a which you're interested in. I think number two is the manager and the team that are going to be working in should be somebody that you feel you can learn learn quite a lot from. And number three should be, the founder itself should be somebody that you feel, again, you learn a lot from, and your wavelength matches with them. I think this should be your gating criteria to try to shortlist the right set of, companies, right? Once you shortlisted the right set of companies, I think it's very important to, go in with high intent, right? Like, a lot of people just basically apply for jobs and, just message, the CXOs over there or the manager over there that, hey, I want a job over here. And, there are many, many people do that, right? Like, as an example, for me, I literally get, like, thousands of people, messaging this stuff on LinkedIn. And very honestly, it all goes mostly in the spam filter, or, I just honestly don't even reply, right? But the set of people I do reply to, right, their messages are very high intent. This is my skill set. This is exactly what I would want to come inside your company and work on, right? So what this tells me, right, is that they have actually done proper research about my company. They are people, again, of high intent, right? So I've had literally people who come in and join the company, accepted whatever salary we're offering them, right, which was not even their expectation, close to their expectation, as an example. But they've come in telling, our team this, that, listen, I'll come in because I really have high intent, and I want to come in and I want to show you what I'm all about. But I'm going to do this over the next 6 months. I have a target X, Y, and Z, right? If I meet this target, this is what my salary expectation is, right? Like, And our team feels very, very happy onboarding such people, because we know that they will be full, they'll come in, and with blood, sweat and thunder.
Like if they're motivated to work without money, I think they'll be more motivated to work with money.
Exactly, right? Like, and that's what we want. We want to pay, we want to pay basis performance.
Yeah.
If you are, a rock star, you deserve to get paid like a rock star, right? But what happens sometimes, over just a couple of hours of interview, that doesn't come out, right? But when a person comes in and works, for 6 months, they deliver, certain things. No sensible manager or founder will let go of like a rockstar team member or a great team member, right? They will always give them whatever is fair, essentially, right? And I think that's what you do as a very early stage team member or early stage, employee somewhere, is build leverage like that.
No, that's I think a very good point, and this is the first time I'm hearing of it. So definitely it's a value addition. I was actually researching one of your posts where you said that a lot of the successful startups that are out there are just like good on execution part, and they need military level execution even though their idea is like anything. I want to hear one of your stories from your startups or companies where you've had a very military level execution, so that like at least I know what military level execution means. Like,
I think what I mean by this very specifically, right? I think what happens inside startups, right, is, I think most companies are unsuccessful because they tend to lose focus, right? And what I mean by that is, usually people end up chasing too many targets, right? And then you don't have enough resources in terms of, I would say high IQ level people, plus the money to do this level of experimentation around too many horizontal problems to be successful at any one of them, right? So the right thing to do as a founder, right, to really battle against something like this, and this is something which, I started doing at Hotstar, because that was a massive company, right? It was a company which was, we were operating at like, 350 million monthly active users. It was,
but I think when you joined, it was like 15 million. I think you all scaled it up.
Like when I joined, it was like 7 million, and we obviously scaled it up like, multifold, like 50x pretty much, right? But I think, one of the reasons why we were able to make this happen, right, in a company as big as them, right, because whether it's big or small, right, what ends to happen is, every department wants to shine, right? Every CXO has their own ideas. They all want to push their ideas. And, a lot of it is sometimes a little bit of politics, right? Because human beings want to shine independently. Sometimes, they aren't the best at making the team shine, right? Like, and by team, I mean the entire company, right? So what tends to happen is a lot of people push their own agendas and, make their department shine, right? The marketing team will talk only about marketing. The accounts team will talk only about accounts. Maybe the design team will talk always about a redesign, right? I think what really helped and what we did over there was we decided a North Star metric, right? Which we used to announce publicly inside the entire company, saying that our North Star metric is X. Like as an example, when we started at Hotstar, right, we had one North Star metric, which was watch time per user per day, right? That's it, right? We followed this for a period of 8 months, and the way this helped was that every single person, if they had an idea which they wanted to execute, they had to talk about just, what's their idea, how is it going to move this metric, right? So automatically, if the whole company started thinking about just one thing, right, and everybody was just focused around this thing, and all resources, magic. When does magic happen? When the entire company is obsessed around changing one metric, right? Then that metric will change.
So every small idea that they had was kind of a connective of that particular goal.
Everything was that. And what used to happen, because a lot of, ideas, the execution depends on the tech team, product team, right, or the design team. We used to just basically categorize all the ideas by effort and impact, right? There's a simple equation. What's the impact expected, and what's the effort required to do this, right, in man hours. In this equation, we ordered everything in this equation, and we went after everything which came in terms of ideas, right? This made sure the whole execution was absolutely, I would say merit driven, right? And after 8 months, we actually decided to change the metric to be subscriber, like number of subscribers in Hotstar, right? So everything we started doing after that was completely driven to increase the number of subscribers that we have to our premium service. right? In a company like Hotstar, frankly, we have enough bank balance to be able to be distracted, right? And not die, right? We may not be able to execute to the level that we want to, but we'll not die, right? But inside startups, the stakes are high. You have limited money. You are going to burn it all right to the ground if you don't focus and do something right. So, a classic example of, things like this is we've seen, I always talk about this, right? Think about Paytm, right? Like when they got listed, one of the reasons why I feel like, they got smashed in so many ways, apart from their financials, etc., was that they were too much of a horizontal play.
Define that.
Basically, they were doing too many things, right? Like when you open up their app at that point in time, they were doing travel, they were doing e-commerce, they were doing, million. It was just honestly confusing as an end user, and I think it was confusing as an investor also.
Like what are you trying to do?
Yeah, what is Paytm in one line, right? And I think this became a huge question mark, not only for their users, most importantly, but also for their investors. I think if you notice what's happened inside their app, right, is over the last few years, they've cleaned it all up, and now they've become a pure play focused payment company, which happens to do some other things, but the other things are clearly tertiary, right? So this level beauty and focus is incredibly important, right? And I think, kudos for them, right, to understand that this is the problem and actually solve for this, right? Because a lot of people,
They don't identify the problem.
they don't identify the problem only, right? They would just continue executing till they die.
So can I ask you something? And if you don't mind me asking that, like, was that one of your motivations to join Hotstar? Like, because I think after co-founding PharmEasy, it was doing pretty good for the first, I think even now, but for the first couple of the 2 years that you were there, you all even raised a lot of money and you all were like, everyone knew about it, right? So then what was your motivation to leave that complacency and like join Hotstar as the sixth employee, I think?
I think my biggest motivation was, frankly, I'll tell you, and this is something this is where I learned the economics of venture, right? Like was, when I was doing, PharmEasy, within the first couple of years, I think we raised almost upwards of $200 million, right? So we raised a lot of money. I would say that, VCs were like, jumping on top of each other to, fund us. But I think despite all of those things, one of the things which ended up happening is all founders ended up having, single digit stakes inside the company. And one of the biggest realizations for me was the fact that, when you're a founder of any company, right, I think what ends up happening is that, even though there are some down times where you can actually afford to relax a bit, I think 95% of the time you are working, like, I would say 4 to 5 jobs. That's the intensity at which you have to run a successful company. So, for me, the economics just didn't add up, where if I am working like a crazy person, right, to have like single digit,
you're kind of like an employee to someone else.
Exactly, right? Like, I always tell this to other founders and I always tell this to everybody, right? Like my motivation to run a startup is never money, because frankly, if my motivation was just money, right, I would actually do a job. Because the reality is, right, like, running a company is absolutely hardcore, right? Like there are so many ups and downs, it's just not normal, right? So, trust me, nobody in their right mind does it for money after you have actually, once you're in that space, because the minute you think you're going to do something for money, you'll leave that you'll stop your company in 6 months time and bounce.
So what are you actually in it for? Like then so for me, my biggest motivation is money if I'm working towards something, right? And so is the motivation of crores of people. So then after you start a company or you join a company, like what becomes your motivation for that if it's not money?
I think, I personally feel this, that most entrepreneurs who are, doing, great entrepreneurs, they run companies or they build companies as an outlet of their creativity. And they feel like they have to do it more than they want to do it. Right? Like, because, I cannot stress this enough that I feel like, if you want to make money, right, a job is a lot more stable, a lot more, I would say, relaxed, a lot more short, right? For every startup, 99 startups fail, right? So it's definitely not a path towards money. If you want to make money, it is one of the paths towards money, but that cannot be the motivation for that, because you will fail more than you succeed, right? So if you're in it for money, the pain is so much that you will bounce, right? I think if you're in it to truly solve this, right, then you see, basically you have to get up every single morning and take pain, right? Like it's like eating glass every single day. No sensible person does this,
It's
right?
like gymming every day.
Yeah, it is very similar, right? If you are a hardcore gymmer, as an example, right, you go in and right, exactly, right, it is that level of discipline, right? You only do this because you want to do this as a lifestyle.
No, because it makes you feel good, to be honest. Like, I mean, I don't do it anymore. Like, when I started, I wanted to do it for the body, the looks, and everything. But now, after 4 years, I just want to go because I feel mentally satisfied, you know?
It's an outlet.
Yeah, it's an outlet. Yeah.
It's a form of therapy.
Yeah,
right?
exactly.
So literally, by the way, that's what doing a startup in many ways is, right? For people, it is an outlet, right? It is an outlet to their creativity. They do it because this is what they know how to do. They cannot go back to doing a job because obviously it has to be done under somebody else's supervision and somebody else's rules, and that's how it kind of works. And maybe somebody else doesn't even feel this problem is real or doesn't feel it can be solved, right? So that's what it is. But mostly, like I always tell people, right, like if you think this is a way for you to basically end up making a lot of money, it is one of the ways, but it's definitely not the most optimized way.
Yeah, it's
right?
not, it's the most difficult parts, I can
It
say.
is one of the most difficult parts,
Yeah.
right? Like, see, I'll tell you why I feel this way. India is not where it was, in my opinion, 30 to 40 years back, right? See, 30 to 40 years back, no, a lot of people used to say this, that if you want to make money, you have to be a businessman, right? It's fundamentally incorrect today, right? Today, there are enough and more white collar jobs in India which are incredibly high paying, right? And if you want an example of this, right, you can go to actually any of fancy buildings where you live, right, and actually go in and check with the people who are living there, what do their fathers do, right? And you will find at least 30-40% of the people who do corporate jobs, right? And despite the real estate costs, etc., which are there in one of the most expensive places in the world, right, the reality is, because salaries have reached that level in India today, right? If you are obviously in the top 20%, top 10% of the performers, right, which, let's put it this way, right, I think it's, in my opinion, it's a lot more easier to be in the top 10% of high performing employees than to be in to be like a very, very successful entrepreneur, right? Because I feel like being an entrepreneur is doing 5 jobs.
When I was actually, I was born in 2001, and when I was being raised, I was taught money is the most important thing. And the way to do it was to do a business. Now, the thing is that obviously after 10 years or 20 years, it's changed a lot, but there's still a notion where, since entrepreneurship is being celebrated, there's a reason to it, right? And the reason to it, that is like, people come in with like 200 crores of net worth and all that, whatever, even more. And when they say that entrepreneurship is not cool, people think that, oh, like he has money, so he's saying it. But they don't realize the actually, like, the nitty-gritties of everyday work or what it's like.
See, I'll tell you what, like I don't, the right thing I like to say is that, I think people should know what they are getting into, right? Like, see, the point, I don't like to, I don't like this thing where, people basically, it's become like like a tag, it's become a party line, right? Like, I'm an entrepreneur, or, I'm
it's,
going to
it's
do
a
my
cool
own
thing,
startup.
like I said.
Exactly, right? It's anything but that, right? Because it's like, think of the hardest job, there is, and, saying that out coolly, it's not that. Like, it's hardcore work.
Right. No, that's a good answer. I have two of my last questions are very interesting. The second last question is, I'm very curious to know. We read stakeholder theory in college, where if you're a private company, you can focus on the long-term goals without kind of thinking about what the investors are thinking or the shareholders are thinking. Since you're a CEO of a public company now, you have to kind of think about everyone and everything and how you're creating that wealth. How is that kind of affecting your decision making in the short term and the long term?
Frankly, it's not affecting my decision making at all, right? And I'll tell you why. So I think the number one theory is, I think the fact of the matter is, in our company, right, like I'm the majority shareholder, right, like me and obviously the rest of the founders, we basically have, I think, upwards of 70% stake in the company.
Right.
So this means that I'm the largest shareholder, or me and the founders are the largest shareholders in the company. So we can afford to truly think long term. And number two, we always will do things which are pro shareholders because we are the largest shareholders. So by default, as an example, we don't do anything short term, right? Like one of the common questions we always get from our shareholders is, why don't you grow fast? Why don't you create 1,000 crore book, 2,000 crore book? And I'm very clear that if I wanted to do all of these things, I would have done it, right? Like there is, given obviously our past background, there's a lot of investors who've been very, very keen to acquire stake inside the company, give us a lot of money to raise to where we want to be, where we'll be in probably 5 years time, like be there in 6 months time, right? But we will not do any of these things because there is a path, there is a journey. We want to get there in a particular way. We value equity really importantly. We value building stable companies very important. That's why, very honestly, whenever we do even earning calls and things like that, right, I'm brutally honest, because I really personally don't care if the opposite person buys or sells my stock. I don't care if the price of the stock is 2 rupees or whether it's 20,000 rupees, because no matter what the price, I'm not going to sell.
Yeah.
Right. I'm very clear. I'm here. Like this company, by the way, has existed for 35 odd years. It was started by my dad. I have come in now. In the last 5 years, we've diluted like 0.8% to be precise. I'm always, I think for the next, 20 years itself, I don't see us never being the majority shareholder. It's existed for the last 35 years. I'm very confident it'll exist for another 100 years. So,
why do it? Yeah, I mean, but then why did you go public if that's the case?
So for me, I think there are huge advantages of being public. I think the number one advantage is, the fact that it brings in a lot of liquidity for my team members, for my investors, and even for the founders, right? If any of these three entities wanted to sell their shares, they can just go out and do it.
True.
So it's a huge advantage because we've had team members who've been in the company for the last 5 years. The stock has gone from like, when I started, I think it was like some 10-15 rupees. Now it's like 500 rupees.
440.
Correct, right? So like there's been a huge ramp up. So a lot of my early team members, they've made a lot of wealth. My early investors have made a lot of wealth, and they are not dependent on anybody, including me, to liquidate, right? They can just liquidate, take home a pretty penny as well, right? And everybody's on their own journey, financially, right? They may need it because they're starting a family, they want to buy a house, whatever it is that they want to do, and they're free to do that.
I can relate with the legacy parts and everything. I'm yet to solve the problem, so we'll get, when I get there, we'll talk. But thank you so much for coming in, Mikhil. Like, thank you for discussing genuine problems and giving genuine solutions to me and everyone else. And yeah, I hope you had a good time here.
Absolutely. Pleasure. Thank you so much.
Thank you so much.